Alright, so I'm going to be doing some back testing. I'm going to be refining what I've learned about the turtle soup, something that when I first went through the core content I could not understand at all. And I'm going to explain the different criterias and explain it so that way I can deepen my understanding. So without further ado, let's get into it. Here we are on the NASDAQ. We're on a daily chart, and this is a continuous contract. Alright, some of the levels I marked last week were this low, and this low is still relevant because it's a relative equal low now. So we've seen price impulsively, react from this, but more importantly, with the turtle soup, essentially the idea or concept behind it is that below an old low, market makers will look to place their long orders below an old low. All right, now below this low, why would I not just say, oh yeah, here we go, we have this low here. All right, we trade below it, time to go long. Why would I not do that? Well, we have to use higher time frame objectives to frame that. And so in this case, what we have here is we have this low, and we can see first trades below here, and then boom, it's profitable. Close at an old high, profitable. Same thing here. So I've already framed this idea. I'm gonna explain it, and then I'm gonna go on my charts, and I'm gonna additionally, frame this. All right. So here's the example in price. All right, this is this green box here, and we are on a 5-minute time frame, but we'll start on the 15-minute time frame. Okay. So here we go. The top of the last down close candle before the up move, and that is traded above, and then it is retraded. So this is the order block. Now this also is a market structure shift on the 5-minute, and now we're going to go ahead and refine that idea. All right, so this would be last Wednesday. Yes, okay, yes, last Wednesday. So here we go. Top the down candle before the up move. Okay, retrades 50% of the order block. Okay, then it's also a market structure shift because not only are we below that higher time frame objective, but we have this swing high here, lower candle to the left, 2 lower candles to the right, traded above, displacement. Okay, boom, retrades, expansion move, retrades back to the order block, continues higher. Now this is, if I entered right here, this is risking 12 points for 160 at an old high, being this high, which we do trade above. It would be a total of 8 micros, and with a $50,000 account, that would not be enough to risk a full contract. It would be like 0.8. But that to gain 160, and also micro positions allow you to scale and do the pyramid entries, where if I did only one unit, I had to close the entire unit. All right. So anyways, that's the idea. The reason this is red is I was just marking the displacement leg. So above this old high, retrading that displacement leg, trading back to an imbalance. We could have bought there. This would be a more precise entry with lower risk. And that's pretty much the idea of a turtle soup, is, lowering that risk, but I'm framing it with that idea as well. All right, now we'll go back to, or here, sorry, let me do this. Okay. I also wanted to point this out. So from this high to this low, this is optimal trade entry between 62 and 79. This is an optimal trade entry as well. And so that paired with this old low, okay, and granted, this was a consolidation, so we had this very tap. Both of these candles right here are Wednesdays, by the way. But anyways, optimal trade entry, we know it's not going to want to be in a deep discount for long. And every time it trades below the 79 level, that's when we have that movement. Not to mention the fact that we couple that with an old low, and then it becomes relevant. Then these false breakouts become relevant. Okay, this below this is not a false breakout, because first of all, it would be in a premium. So that's like the first thing. Why would I be looking to buy in a premium? Because this is literally just at equilibrium in this parent leg. So like if I was like, oh yeah, let's buy here, I'd literally be buying at fair value into it. Just wouldn't make sense. Okay, I would not want to do that. Now we're gonna go ahead and do the same thing, but with this one here from the 27th. So we're gonna frame the idea behind that one on the 27th. We'll go here, 15. We're gonna go down to here, 27th. Okay, here we go. here's that price action. Okay, so this is the top of the candle for the up move. Okay, so we mark that. We can already see the next candle trades higher than that, and then it will trade back to our order block that we're going to refine now on a 5-minute time frame. And this is only relevant, we're only looking for this because in general we are below that higher time frame objective, and we are also in a discount market. Okay, so we're going to change this. Okay, here's the top of the down candle for the up move. Actually, let's look at both. So why not? Okay, so here on the 5-minute, measuring that, move above it, but then it continues lower. Even though this is refined, I don't really like that, to be honest. So now I'm going to do it. I'm going to measure the order block with this, because that's just not, this just really isn't that clear to me. You know, like we have that move above it. All right, and then have this move. That's like just barely into the 50%, but my stop loss I would be putting down here. So that would still be profitable, but it would have more drawdown than I would like. But it would still be profitable. All right, here we go. Top of the order block, top of the down candle before the up move. Okay, we trade above it, and then we trade to the 50%. This will probably be better and more refined on a lower time frame as well. So here we go. Okay, here we go. This is just interesting because I don't really know. Okay, so the top of, like, it gets weird to me when you get to these lower time frames and it's like more high frequency, but the reason I say that, well, actually, we can even try to look. Let's look at this one. Yeah, I don't really like that either. I'm having a little more of a struggle framing this idea, but anyways, this would then be the order block. So like here's the thing, and here's why I'm like getting confused. So now that we're on a more refined time frame, obviously there's more definition with these candles. So this right here is trading to the halfway or 50% of this order block here. Now this order block becomes 2 more candles, so then when we refine that, it doesn't make any sense on this. Here, give me 1 second. Okay. Anyways, the candle was like, it was like right here. And so because this is refined, if I move it, then it doesn't make sense. But we'll focus on where it was, which is here. So this being the order block, and it does trade to the halfway point or 50% right here. And then we could have bought from there. All right. So I'll just frame this as an order block. Oh, I'm completely seeing this wrong. Okay, I understand now. Listen, the top of this is the higher time frame low. I totally understand now. Okay. We should be using this order block, and okay, we very slightly trade above it. I'm sure that on a lower time frame, even lower than the 3-minute, it's more refined. Okay, but we do trade above that order block, and then afterwards, all right, we retrade to that order block. All right, it's about to 50%. Right. Bro, fuck, I don't. No, that doesn't make sense either. All right. because I was gonna say that this was the last down candle before the up move, so we should be using this one. But even then, this trades to here. So I guess on these really low time frames, it's gonna be harder to frame the idea for now, at least in my current understanding. But all I'm gonna go ahead and do here is, and like look at these relative equal highs too, and just how it respects that. I'm gonna go back to the 5-minute because I'm not seeing it there and I'm getting confused, and so I'm thinking like even if I was looking at it in price, I would still need to see August, so 27th, okay. So I'm thinking that refining. Okay. So this, it like makes sense because we have, this is the order block, okay? Then we trade above the order block. This is also displacement above an old high, and then afterwards it literally trades to that 50% of the order block. It even does it in that same candle. So solution to this is to understand where that order block is on the higher time frame and then go down. All right, but anyways, this is the down candle before the up move. This order block as well, I'm not really going to consider that a valid order block, and the reason why is, first of all, this looks like it's part of the 130 manipulation in the afternoon, like just this down movement oppositional to the like larger movement in the afternoon. So that's what this really looks like to me. It's some manipulation. This also trading below this old low invalidates this as a order block. Then we have this large displacement move. So then we mark the top of this candle, the down candle before the up move, and we do trade to the 50% of it right here. So that could be our entry as well. But for this, that's really all I can frame. Like looking for a market structure shift, like this is the only other idea I would have, which is after the entire move, okay, this displacement above an old high and then retrading that before continuing higher. But like I don't like this price action because I would be expecting to close above an old high in that scenario, because I would be looking at this as a buy. So even though this can also be like done on the oppositional side, like displacement below an old low being retraded before continuing lower. So to be honest, this would be a way I would just get confused. But I think the takeaway here is to understand what's going on the higher time frame, of course, and that's what ICT is saying to focus on anyways. So I'm going to leave it at that. Just some back testing on turtle soups, and I'm going to continue doing this throughout the week and continue getting better.